Hello and welcome everyone to the PUG meeting. First off, before we begin, may I ask for, well, let's do the typical sound check. And also, can everyone see platform in front of you should be, this time around, HGSI, their version of the radar screen, I guess you want to say, or scan result page, as well as a chart. I see it. It is up. You sound great. And that's just fine. Thank you, Gina. Brian, thank you. And you know what? We're going to start with, I'm not sure it's the right Brian, but we're going to start with a question that Brian sent in, by the way. I don't know if it's the right Brian, but on an LCC indicator, what is the max bars to trend? How wide would you tune that input? Max bars, that's are you talking about the TradeStation version? And that would not be, that's kind of like an input that's coded behind the scenes. We use 20 bars because after 20 bars, something by then would, by 20 bars, something new should have happened. Okay, so even on a daily basis, if you have a last conditional trend weekly, last conditional trend over 20 weeks, there, you know, we can't just have lines on a chart all over the place. So we maxed it out at 20 bars. That's the answer there. Before I begin into more questions, you know what? I should probably just finish the question, and then I'll get into some announcements. I did this all backwards. I'm so sorry. I should have a slide that tells you that trading's risky. I should have a couple things that we want to talk about, people not getting emails. So we'll take this opportunity to do some announcements. But in specific, what is PUG membership and what is the PUG group? PUG stands for Person User Group. It doesn't matter if you're, generally these aren't for algo questions, but I will take an algo question. Most people don't know what the algo strategy system is. So Person's User Group was designed for TradeStation, Thinkorswim, now HGSI, for questions on my indicators. So Person's user, somebody that uses Person's indicators and a group. So that's what PUG stood for. All right. It wasn't because we like pug dogs. We don't dislike pug dogs. It's just that it was Person's User Group. All right. On the LCC indicator, is there a minimum price movement to move the signal with the trend? Meaning, say it's following a bull trend. When does it follow the prior bar up? Does the prior bar need to move a minimum up? You need a condition. It's a condition, not a time event. Last conditional. I'm not sure you're defining the right indicator, though. We're talking the last conditional change. And for a last conditional change, let me get a TradeStation chart. So first off, last conditional change is defined as a bar of the low or high of a bar that closed greater than a previous bar's high or low until a new one is formed. So here's one that developed a resistance until a new one was formed, and the reverse is true on the upside. Here's a last conditional change white bar, and a new one is formed. So it's really not to do with it's got nothing to do with a last conditional change. So the LCC indicator, and maybe that you're defining a different indicator, but the last conditional change had to deal with a bar, and the low of that bar becomes support until a new last conditional change is created. And on TradeStation, what we did is we created white for bullish and gray for bearish, and some people can't see that. So you can actually just, if you carefully find a last conditional change on TradeStation, click on it, go edit it, and bring in the page and just go to color, and then you can change the color. And I think one of our members changed, had it to fuchsia. So on other platforms and other things, we had it changed to fuchsia. So the last conditional change indicator, basically it just says bullish, bearish. It doesn't have anything to do with timing. But what we did is time it out after 20 bars. You wouldn't see a line anymore. So for an example, odds are that this is a support line. That's the last conditional change, that white line in the sand. That's Pinterest on a weekly basis. So they stop until a new one starts or after about 20 bars. It's got nothing to do with the time. So I'm not sure if that's the last conditional change indicator. All right. And that's what that's defined as. It's a support and resistance bar based on candle pattern and price closing greater than a prior bar's high. The low of that bar becomes the new support until a new one is formed. From this time forward, you never saw a market close. They may have gone higher, but they never closed greater than the prior bar's high. This one closed lower, and so therefore we have the average of the two highs, or the highest high of those two bars is defined as the new resistance, which today in Pinterest on a weekly basis, this is a weekly chart, closed so far. It's not closed yet, but Friday it would close over resistance. So this would signify that if a market is at a resistance zone, it tends to stall until it's violated. Anyway, that was the whole nature of what last conditional change was all about, which is something that I identified and wrote about in, I don't know, 16 years ago. And we define it and put it in coding, and it's defined in a market, and then threw it up there as an indicator. And that's where it derived, and that's how it's calculated. And that's got nothing to do with minimum bar prior or anything like that. So I'm not sure, maybe it's a different indicator that you might be referring to. So let's get into, first and foremost, we had a lot of questions about people not getting an email alert. So first and foremost, if in this day and age with spam police, email laws, commercial laws, platforms that do the email stuff for you, I forget what they're called, because of all the robots and the spam, if you by mistake were receiving our emails and at one point in the past went through and said, I'm just going to clean up all this stuff, and you unsubscribed, you personally have delisted yourself from our database. Even though you might be still a client, if you unsubscribed from an email, you unsubscribed from the our email server people thing. And so therefore, I should probably know what it's really called. I forgot. I got a huge lecture by my wife, Mary, and many of you know Mary. She admins everything, and I do everything else. And so she was explaining to me that if you opt out of our emails, we can't resend you an email. You opted out. So sometimes that has happened to numerous people that have by mistake opted out of our emails. And we do send email from our alerts from the advisory service. We send email events out. We do not have I don't do, thank God, affiliate marketing. That's why you rarely, ever, never have seen me do an event, because pretty much with other traders, and if I do, I'm very selective or very careful, because it turns out that they turn around and sell the names and swap the names and change, and it's a cesspool, and we generally try not to do that at all. So bottom line, we value our clients more importantly, since somehow with the Money Show or by some other organizations, my email has gotten on some hellacious lists. And it's interesting because anywhere from 167 to 300 what was it today? 321 emails. Most of them are telling me about the market getting ready to crash, the opportunities and the fortunes to be made in Bitcoin, how easy it is to learn how to trade in 2 easy steps or 3 easy steps, the secrets of trading, the new secrets. It's a new secret. Everything's new. And that's where I'm at my emails. So again, just to discuss, if you have opted out of our emails, you'll never get the invite for the pug group. So go to the website, try to sign up again, and see if that helps. But if you, and another thing is, we don't have any control over this. Yahoo, AOL, they're all different. They all have different things. If they see a bulk mail, they won't send it to you. So they have their own filtering. So if you have a very high filtering email, this is the understanding, you may not get the email invitation to an event like today. What is today? Today is a pug meeting. It's a free monthly meeting. It's called, what we do is it's a courtesy meeting, so to speak. So it's free, and we go over clients that may have a question. If it's something that I'm interpreting the right question, like for example, Brian, who had the LCC question, I'll define what the LCC is, like I just did. So someone that's interested in the LCC or has the indicator, they know how to better utilize it. So the purpose for the pug group was to discuss the various indicators that I've created on the various platforms. And so that's what we do once a month, get together and say, okay, someone had a question. How do we run the scans? We had a couple questions already from yesterday from people that had sent in some questions. I have one for Thinkorswim, and I'm going to get into that in right now. So basically, let's see if I've covered the basis. Trading, as a risk disclosure, trading is risky. There is risk of loss in trading. We don't sell emails, but if you do unsubscribe, you will not be on our email list to get an invite as to when and where we conduct the generally once a month meetings, the pug group. What is the pug group? Once again, it's person user group. It just defines to help investors get the best out of what indicators that I've either helped develop, created, or modernize. And that's where we're at. So let's get into talking about the questions. The first thing I like to do is obviously make sure there's sound. Next thing is to make sure that there's a projection. That always helps when you're doing these video conference webinar classes. We've covered the risk disclosure. We've covered what we do. We've discussed the emails issues. And we've already started off with one question on last conditional change. All right. Woo! And we just begun. It's all good. Let's get into Thinkorswim. All right. So Thinkorswim. Thinkorswim, if you go and you have Thinkorswim and you say, well, who in the hell's John Person? And I don't know how you got on the email list. But if you pick up any chart, and right now, let's see, what do I want to look at? We'll take a look at TZA. All right, so I'm going to maximize the sell here. I'm going to pick on TZA. This is a specific combination of what you find on the charts here. I created this page. And this is a page that is, it carries a couple things. As you can see, there's these little pink dots, which are, as you look at the time axis down below, Wednesday to Thursday. So these are pivot points, but they're based off the person's pivot indicator. And you have the daily pivot and the weekly pivot. The concept that we utilize, or I've developed or have trained people, is to look at short-term, long-term, and to identify a market trend. If it's truly bullish, more times than not, in an extremely bullish environment, the pivot will act as support. In another strategy that I look at, if the daily pivot is starting to trade greater than, above, north of the weekly pivot, that's a bullish outlook, except if price trades south of said pivots, like here. Now, what is TZA? TZA is the inverse ETF, leveraged ETF on the small cap Russell. If the Russell is appearing to maybe lose steam, instead of guessing, saying I want to sell short the Russell or buy puts, another function that we looked at and that we do is we looked at TZA. If investors, savvy investors, funds, very aggressive traders are bearish on the Russell, they tend, or any market, they tend to look at not just options, but also leveraged ETFs. And so what I try to do is explain that if this leveraged ETF, if we saw volume come in, and again, that's the next thing that's on the chart, is this tool that Joe Granville created. This is not a John Person tool. This is on balance volume. So on balance volume helps us to define, and it measures the rate of change of volume from an up bar to a down bar. So if a bar was up, it assigns all the volume of that bar and accumulates that total, and it assigns it a positive reading. So you would have gotten a positive reading. The next bar is down, and all the volume associated with that one single bar was calibrated and calculated and assigned a negative value. So it gives a negative momentum or a decline. Now, if what I use on balance volume for, without getting into a complete lesson, but I think a lot of you are not familiar with my work. I don't know if there's a lot of new people here. This is being recorded. Some people will come back and review it on our YouTube channel. Just to define the on balance volume trend, I firmly believe that at times you get a couple things that might work out of on balance volume. It's not 100% perfect, but you will find that at times you might get a, just like price, higher high, higher lows. When you start to see a combination of higher highs and higher lows, or potentially, let's call it a breakout pattern of volume, volume tends to lead prices. If you notice, we did get a little extended breakout on volume, so it started to suggest that there was a newfound trend higher, which led to a small short-term decline last week, if you guys recall. As the market broke out, notice the combination of why we even have pivots. The market started to do something very unique. The weekly pivot, the market was well defined as negative. The daily pivots were below the weekly, and that tells you that something, this is not a buy the dip mentality. You want to buy a market on strength, or if the market's showing strengthening conditions at weaker prices. So you could, what do I mean by the last statement? Strengthening conditions on weaker prices. This is a weaker price than that. And the condition, the volume, the very next bar, the volume surge higher was showing that there was an interest of buyers at that low. This was a newer low than the prior swing low. So that's a low, that's a high, that's a swing low. And the volume action showed that perhaps that was just a quick mini meltdown. Someone hit maybe stop losses, and there was a huge thrust of volume, and it started to show some accumulation. So the condition of the market had changed from down, 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 no interest, no volume, no trend. It was still not doing anything, down, 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 until all of a sudden there's a change of volume trend. Interestingly enough, due to math calculations of pivot analysis, you'll notice that the market started to do something unique, a new conditional change that it didn't do before. It started to trade back above not just the weekly pivot, but it was now trading above the daily pivots. This was a time frame here a week ago, a week and a half, 2 weeks Wednesday, excuse me, week ago Wednesday, right? A week ago, this was yesterday, this was a week ago. A week ago Wednesday, we had a new conditional change in the market right here. We had price trading greater than pivot and on accumulation or an increase in volume trend. In fact, we had an option strategy where we were in a put spread, but then as we got into Friday, there was something that was a little weird. On Friday, the volume action wasn't acting as strong, and therefore I decided, listen, pull the trigger, get out of this trade. Something's not right. If the market was going to go up, we should have seen a stronger thrust of volume, and it just wasn't showing signs of strength. On Monday, when we walked in, many of you remember, I said something's weird about this trade because we had some members who said, I'm going to hold on to this trade a little longer, no problem. But on Monday, I actually said, listen, we've got a little issue here with the market. You have the market's trying to thrust and make a new price high, and you have a kind of a divergence in the volume. The volume is starting to go down. And some of you were there, on Monday. I mean, it seems like a year ago, but this was actually just Monday, right? I mean, there's a lot that's happened in our world in the last couple of days. It's just exciting times. Pick an hour, pick a stock, I mean, everything's changing. It's news is insanely rapid at this point. With even today's active earnings reporting, So there's only so much you can trade in any one day or in any one week. But the point is that for me, if a market is supposed to be bearish, or in this case, this is a inverse, a reverse, inverse, reverse, whatever you want to refer to it, ETF. I hope I'm not being, for new traders, too complicated, but think of the concept. If more people believe that the market is going to go down, and I want to use a legitimate leveraged product rather than an option, and if I'm a smart trader with lots of cash and lots of equity, and maybe I work for a bank, I can't sell the ETF, the IWM short, but I can buy this. You would think that you would want to attach yourself to an ETF that has a lot of liquidity, and therefore you would start to see really strong volume trends reverse, and volume should lead this market higher. So on balance volume in this case, it's more of a science and a little bit of an art that we like to look at and that I teach, but I use it because of lack of in Thinkorswim, because it doesn't have one of my proprietary volume tools. So the fact is, let me clear all these little silly lines that I draw in here. The fact is, if I'm getting a price action move and I'm seeing a determinate value change of market trading north of pivots and higher time frame pivots at that, but the condition of the market's not attracting a lot of volume, then something's wrong with the trade. Therefore, it's best to get out, which was the right call. When you guys walked in, you saw some lines on the screen, probably one right here. Since we do not have last conditional change indicator on Thinkorswim platform, I manually put these in. And so if the market is ever going to go back, and if it is going to be a bull, or in this case, a market correction, if it's ever coming, first thing that we were talking about the other day is we need this market to get back over that resistance and the weekly pivot. And we also want to see the volume get back greater than the on-balance volume reading, greater than where it was on that bar's close. So that would be right there. And I intersect that line. And that's why we had those lines again here and the line there. It was to identify that if on-balance volume broke out from a volume level of where it once was when price was at that level, and price starts to break out, it's a great setup. It's a great confirmation to go with a long in TZA and or a short in the Russell. That's not materialized. That's why you found it on our charts. More importantly, it would also have defined the market as getting greater than the weekly pivot. And again, that would have been a strong signal. As it is, we're not short TZA, but it was a setup that never materialized. And as everyone knows, between yesterday and now today, for anyone that was still maybe thinking the market was going down, it's kind of painful. So anyway, needless, neither here nor there. But the charts that I create and what I use in Thinkorswim, and now I'll go back here, we'll maximize this cell, and I'll get rid of the, thought I said I was going to get rid of these drawings, clear drawing set. How do you find this information and how do you create it for yourself? Simply go to studies. You can do it the easy way. You can do it a complicated way. You can do it 4 other different ways, but let's just go to studies and add a study. And the first thing you can do is make the hyper jump and then find my name. Now there's several Johns. Just make sure you get the right one. I'm John Person, and I have 3 indicators. Funny thing, I'm John Lloyd Person III. Third does not stand for 3 indicators, but I am the third person in the third person, person to person. And I can go on, but we won't. But we have PMC, PPS, and person's pivots. So if you click on person's pivots, it'll default immediately. Default, meaning the first thing it throws at you are daily pivots. How do I know that's a daily pivot? Look at the time horizon. It's Monday and that's Tuesday. So between these 2 grid right here, it's a red line. and it recalibrates to the next day. In fact, you can clearly see this is the person's pivot indicator for a daily basis. Since the end of the close on Monday, it recalibrates just like it did today. And it's telling us tomorrow, this is the support and resistance, not only the support and resistance, support being green, resistance being red, but it's also suggesting that the market is targeting a lower high and a lower low. By the nature of behind the scene moving average component, it only gives one resistance, red line, one support, green line. And that's the power behind person's pivot. It helps to define if the market is in a bullish uptrend, and it gives you the resistance in that bullish environment. And then if the conditions change, which sometimes they often do, it would then define the market condition has now changed and projects in the future. Just like this is not an after the fact projection. It's a projection saying tomorrow is giving us a projection that it's bearish. So it's an indicator that defines market condition, the person's pivot. It's an indicator that helps define the direction as well as support and resistance within that time frame. Daily pivots for the day and weekly pivots for the week, monthly for the month, and Thinkorswim finally added my quarterly outlook for longer term traders. All right. So that's, but when you came into the room, you go, hey, person, you only had a little pink and a red. What we did is we went up to studies, and I went to edit studies, and I'm going to get rid of the old one. I'm going to apply an OK, and that puts us right back to what everyone saw in the room. And let me get rid of all the stupid trend lines I just drew. All right. You go to studies, and you go to edit the study. And what I wanted to see with these charts is I just wanted to see my pivot point. So first and foremost, when you open studies, you have these little drop-down menus. So from this point, I can change it to a one-day pivot, the average of 2 days. I'm often asked, why did they do 2 days? When Tom Sosnoff first, and I worked with Tom first putting this on Thinkorswim before he sold to TD Ameritrade and moved on to his new venture of Tastyworks and Tasty Trade. He let me work with one of their programmer guys, and we threw the kitchen sink at this, except for quarterly. For some reason, the funding for indicators of this had dried up. I don't know. It was on the bottom. By that point, it was on the bottom of the to-do list. But they said, well, we'll just average 2 days, which made sense because what I was saying, why would we do that? And here's the reason why, is that if you have 1 day of a wide range and 1 day of a narrow range, you can average out the 2 days of wild range of, let's say, Monday's a small range, and then Tuesday's a wide range. And then day to day, you're kind of skewed with these wild moves. If you averaged Friday to Monday, you'd get a different reading on Tuesday. If you averaged Monday and Tuesday's numbers, then you'd get a better average of the pivot analysis for Wednesday. That's what 2 days means. The 2 day look back window. 3 day means the same, just 3 days, 4 days. I don't use 3 or 4 days. There's no purpose. Someone wanted to, you've got to use maybe and cheat. If it's a 4 day work week, I guess you could use 4 days. But I use, generally speaking, weekly. And I use monthly, option expiration, and quarterly. Option expiration, this was the very first platform to ever use an option expiration. And because most markets in equities and equity ETFs kind of pin, not settlement, so to speak, at the end of the month, but on option expiration. So it was an ingenious way of using pivot analysis at the time, and still is, and it's very valid. So what I did, the only thing I did is, if you go over here where it says RR, that's the calibrated resistance, and that's the calibrated support. So I just go over, and if I turned it back on, it'll show you the resistance in red. If I turn that back on, it'll show you the support in green. I didn't want those on for this particular analysis because I want to see it's a system, a strategy. If the daily pivot gets back above the weekly pivot, it's telling me mathematically we have a new defined trend in the market, and it may give you a nice boost. And so bottom line, when the daily pivot falls below weekly pivot, it's telling you structurally, man, this thing's got problems. Now, if the market gets back above daily and weekly pivot, and that's what I had a line in, and above a last conditional change resistance, it's an important candle, it would really heighten the fact that we broke through mathematical resistance on a short-term basis daily, mathematical resistance developed by weekly time frame for higher time frame traders that might look at, higher, greater time frame analysis, and then again a specific candle, because it was that candle that actually, not this one, that didn't really break the low. It was this one, and that really defined the momentum change of that little uptrend. It actually, ironically, if you notice something, just looking at the coincidence effect, if you just draw a little line, whether it's, precise or not, I'm trying to get exact, but if you drew a trend line off, that defined this little uptrend, it was this red candle here that closed below not just lows, the pivot, it broke the trend line. Didn't break by trading below it, it broke by closing below it. So the high of that bar, the market, in order to change value trend from down to up, would need to get back above that level. And that's a last conditional change. I just gave you a $50 or $60 book explanation of what last conditional change is and how we combine and use the information. Or at least how I use the information, and or how I, more importantly, try to explain how I use this information in our live trade community. So how do you get the information? Go to studies, go to add a study, find my name. The first thing that you're going to have PMC, PPS, persons pivots, and that's how you get the daily first. If you don't want the daily and you want, let's say, quarterly pivots, go up to edit the studies, and then go to the pivot that you just added, hit the cog wheel of change, the wheel of change, not the wheel of life, and then go all the way down to the quarter and hit OK, hit apply, hit OK. Now you have, where'd it go? I don't know. It could be so far skewed out of whack. We could be way below support for the quarter. What you would do now is either tighten up your time frame or change this at least to a daily chart, and voila, here's your quarterly outlook pivots. So while they didn't predict accurately at the end of the second quarter, which ended in June, it did recalibrate and suggested if you're projecting to be a lower red and a lower green, and this is an inverse ETF, it's defining that the quarter is going to be bullish for the regular market. The volume trend is also trending lower. So pivots is one form of analysis, and that can help you to define the trend of the market. And on-balance volume helps to identify the condition of that trend. If price is going down and volume trend is going down, it's probably not going to be a good buy until we get back above the pivot point. And in this case, the next quarter came, and the pivot, ironically, as I just defined a few minutes ago, I said an extremely bearish market environment, pivot, fuchsia in this case is the pivot, acts as resistance. So we're still on a quarterly basis until one day we close greater than a pivot on a quarterly, or shorter term than quarterly, maybe monthly. We're still in a defined downtrend of the market for right now. All right. That's one of the ways that we utilize the information and how you find it and how you can build around your the indicator. Build around meaning edit studies, change it. I don't want to see the support and resistance on the quarterly. I just want to see the quarterly pivot. Go to the cogwheel, go to RR, show plot, uncheck it, SS, uncheck it, hit OK, hit apply, hit OK. Now I only have quarterly pivot with my daily, or excuse me, the monthly or weekly pivot right here. That's all I've got. That's all I left on my chart. And so instead of looking at the support and resistance, I'm looking for breakout of an important pivot. All right, and that's how you find that, and that's how that should help people define the pivot. Now, let's talk about since I'm on Thinkorswim, I'm not going to get into too much detail. Let's go to John Person, and the first thing is PPS. We already got it. What is PPS? It's a person's pivot study. It's a math formula. It's got nothing to do with the moving averages, but it paints a picture of buy and sell arrows on the chart. So what you are seeing is if the market's in a negative momentum, it's going to paint an arrow that forms on the close of the bar, and it'll paint a bullish picture by an arrow pointing up and a bearish one by an arrow pointing down. So if you're in a bearish environment and you get a sell signal and you say, well, the volume's not too healthy or it's still trending lower, maybe I'll take that sell signal, or better yet, maybe I shouldn't be long and I'm going to go short the market until a new signal is defined. And that is on, this is just TZA. GBTC is a Bitcoin over-the-counter ETF. I know Bitcoin's quite popular. It's an understatement. We've had GME. Everyone's heard the big news. Here's GameStop, AMC, whether it's ponytails, butterflies, whatever it is. Generally speaking, the indicator and, of course, putting everything together is very efficient on multiple, obviously on multiple assets. And that's what we have developed in the next question was, what is the algo? This is an algo page that's directly live from our live trading room. This is exactly what people see every day, day in, day out, win, lose, or draw. It paints a picture of an entry of what the trade is from a long entry in the E-mini S&P, a 5-minute model. This is an automated model. It enters on stagnant 2 lots all the time. We have a proprietary volume indicator. This is the proprietary volume indicator that's not on Thinkorswim. Underneath that is the S&P 500 ETF Spider. And I have a very unique way of looking at the market where I use the advanced decline, not of the breadth of the NYSE or the breadth of the major market index or the NASDAQ. I use the breakdown, the advancers versus decliners of the S&Ps, since we're trading the S&P. And so we know that anything greater than 250 is more stocks up than down. So we have the futures, we have the cash ETF, and we have an algo strategy on the Spider 60-minute and a leveraged ETF on the S&P called SPXL. Volatility product VXX, SQQ, and in Bitcoin. Why do we have 2 Bitcoins? The reason we have 2 Bitcoins is this was like an old software release version of our algo strategy. And this is the new version, latest update. And we're just running the strategies side by side for another week or two to find out whether or not the new version, which is more profitable than the older version. And what it is that the newer version just to show, it's versus 16 versus Algo 17 version 2 of 18th releases, for God's sakes. This Algo 16 was, I believe, launched in late 17, early 18. So this was a file that we created when people bought and used the algo strategy. from TradeStation. We provided them free workspaces that we developed already, and that's what this particular system and this Bitcoin was from way back then. If we go over to what's the Algo Extreme, the main difference is we can optimize to find out if we're going to day trade, what's the best time to start to day trade. Is it 9 in the morning, 8 in the morning, 9:35? I don't know. We can put a time, a start time and a stop time, and it'll optimize out and tell us what's the most profitable time, what's the least profitable time. Since this is an ETF and it trades, and it's a swing trade model, we need it to trade 24 hours, or not 24 hours, but we can't have it start at 10:30 in the morning when it's holding a position from 3-4 days ago, right? The main difference is it does have position sizing choices. This model that we're trading on Bitcoin is based off a $10,000 size account. If you use position calculated method 1, you can input what your position value is, 10,000, 5,000, 2,000, 100,000, and therefore run the strategy on defining how many positions automatically based off the price of the product and the amount of money in your account. Max and trade loss and profit are optimizable functions that say what's the max that I should have on a trade, what's the max profit I should let this thing get out. And then one of the most unique function is, if you'll notice here, last conditional change. Jesus, John's using his LCC and trading strategy. Wow, he built it into this Algo optimized program. And so just to let you know, we started off with Brian's question on LCC. It was written in a book 15 years ago. It'll probably stand the test of time, and it's a function of putting it into a trading program. We also have something we added, which is the different stop features. We don't have one, we have 3 different types of stop loss. And one is a dynamic, which is a component of last conditional change and the ATR. It's a combination of last conditional change and ATR, and that's why we call it dynamic. The next one is a compression, and that's even more advanced. The compression has to do with time in the market and ATR with last conditional change. Over time, this thing won't even kick in unless we get 2.3 ATRs, and then finally it turns that stop on. Anyway, this program, if I may be so bold, and I'll share with you, red if long, bad, green, it doesn't matter. These are color-coded entry signals with the stop loss. It shows where the entry was. It shows where you get out. In the meantime, on this Bitcoin model, what I wanted to share with you was the stop features and the functions. So bottom line is you see these little white hashes. This is a last conditional change, but this lighter gray, that was the initial, that's the stop loss for the program. Here's your entry. Red is the initial stop. That's orange is an emergency stop. And these little gray lines right here, that's the dynamic. Notice that in time, the dynamic started to already kick in. If you notice over here, the yellow doesn't kick in until like 4 bars later, because we needed 2.3 ATRs before the last conditional change kicked in. And that's when you get what's called the compression stop out. So bottom line, that compression stop, the colors mean certain things. This is the initial profit target blue. When the market gets near its calculated profit, instead of getting out at the profit, what it does is it says, you know what, it's going to trail the stop. And you have 2 other trailing stop functions. When it hits the profit, it kicks in at least an emergency in case one of these other stops fail or the market opens below it. It's got an emergency stop, or these kick in. So it's got a fail-safe model of 3 different types of stop functions. That was what the difference was between 16 and, again, the latest version. On this page that you see here with our Algo program, all the trades, if you can't see the chart and you can't see, for example, that buy signal that kicked in yesterday on SPXL, it is posted as it happens in the performance strategy tab. So you can see exactly what is the signal. You go, oh, it's S&P. Oh, yeah, he got in. It shows it's long right here. I see it now. That's where it's long. That was what time it got in. That's the strategy price entry. And same goes with everything else. So we have other models that are running behind the scenes, such as crude oil and there it is, the British pound and gold. So that the last conditional change and the algo program, pretty much go hand in hand. We've been able to develop strategies with the work, and it all started out of a book 16 years ago called Candlesticks and Pivot Point Persons Pivots. All right, now, let's see. Let's double check other questions. I wanted to go through first and foremost, just to run through this real quick. We're going to add a study, John Person. Let's take a look at what PMC is. So we have really three indicators for John Person. The first one would be Person's pivots, and I think you have a better understanding of short-term, long-term usage of daily, weekly time frames, how to get it, how to maybe filter it to your liking. Maybe you don't want the resistance targets, but the combination of when you get the market from daily pivots getting greater than weekly pivots, and this was AMC, and with a little maybe bump, and I'm not saying that, it's funny because GameStop, I don't know if I kind of saw this run up on our scans, and I completely ignored it. And the reason I completely ignored it is because, let me go over and get it was a daily, weekly buy signal. I completely ignored it because I'm like, I ain't buying that stock. I mean, it's GameStop. I know exactly what it is, but it did show up on our buy setups. And in fact, if we go back and look at the weekly chart, you'll notice, kick yourself in the ass pretty soon now. It's hard to see, so we're going to bump it up. Here's the weekly buy signal. It gave a sell signal. It didn't do anything for, these are weekly bars now. It didn't do anything for several weeks. And finally, it generates, here's a buy signal there, nice little run up. GameStop wasn't on my radar screen. It's a sub $5 stock at the time. I don't do sub $5 stocks. Our eyes have been enlightened over the power of the people, that's for sure, right? But here's the thing, and there's a few of our members now that have been saying, hey, there's other stuff out there that's working, and you can find these, and I'll share with you how you can do that in just a second. But the theory that I just talked about, if the market's truly bullish, the market should trade north of pivots. That's I wouldn't want to take it unless it's looking for maybe a correction in the market or an overbought. As long as the market is trading north of pivots, it's still fairly bullish. That's a pretty crazy looking way of the market. And boy, I'll tell you, it again, the indicators, the on-balance volume, it all kind of came to fruition for maybe how technical analysis can work. Whether I do it or not, I will let you know. I did not take this trade. In fact, one of the things that I did recommend, rather than the bet last week of saying this market should come down, instead of buying put options with the implied volatility over 517%, I recommended XRT puts, because the XRT ETF, by the way, using the concept of like and kind analysis, was absolutely ridiculous as well. In fact, when I say ridiculous, the XRT, when we were bringing that to everyone's attention, and this is where you're going to love this input. This is important. The relative strength to the overall S&P 500 as this market was moving higher, the relative strength PMC indicator was making momentum weakening. It was making lower highs. Anyway, what I was saying is that there was If for anyone thinks that this thing is going to continue to blast off, XRT, the people running the fund, the top 10 holdings of XRT as of last week was AMC and GameStop. So we covered this in the live trading room. Many of you were there for that, and I kind of pointed out the market seems that it was targeting around that, and I think it's even in our trade room, in our post alerts, someone was targeting the market to get down near 75 by expiration, and obviously we came there before. It's ironic because we got there beforehand. In any event, making trade decisions using indicators. A relative strength tells me if a market's moving up and the relative strength is weakening, it's telling me something, there's a disconnect with the market and it's raising a red flag. A healthy bullish market should trade north of the pivots, strong volume, and the relative strength should be outperforming. Using person's tools and the person user group kind of helps shed light on this for a lot of people that maybe forgot, don't know they're there, don't know how to use them. And that's why we again conduct these meetings. All right. So with the introduction of that, let me just share with you some scan functions. So if I want to look at all stocks, what the condition of the market is, if I open up a scanner, I mean, I do this every time we have a PUG meeting, but for selfish reasons, you can go to license study if I want to see, are there new sell signals or new buy signals after today? On a day like today, if you get more sell signals than buy signals, there's a problem. I also added a functional filter here that show me any stock that generated a sell signal today with volume trend lower over the last 3 days. And I can run that scan, and we're doing all stocks, and we'll find out live real time while that's working, how we use one of John Person's tools, which is, again, the PPS indicator, to find out whether or not we got buys or sells. On a day like today, it looks like we had nearly 790 new fresh daily sell signals on decreasing volume in the marketplace. Now, I have it set up by symbol, description, last price, net change, percent change, the high and low, the kind of volume it did, and more importantly, industry. If it doesn't have anything here, it's probably a ETF, a non-listed fund, a pink sheet, it's over the counter, or some kind of obviously 4 stock symbols means it's probably, a new company or over the counter, but 1, 2, 3, 4, 5 names, I don't know where the hell that thing's coming from. But when you look at some of these 1, 2, 3, 4, 5, PWMRF is Edison Cobalt Corporation. It's an 11-cent stock. I'm not saying it's bad. I'm just telling you it is where those, if you don't see an industry group, Thinkorswim doesn't categorize those. But if you want to look at, wow, today we had a strong concentration of daily sell signals in oil and gas sector. Many of these names are, as you can see, very few were large cap names. But anyway, we go through metals and mining was a strong concentration today. So we know that on the board, a weakening, it took several days for a signal to develop, and it took several days. You can clearly see metals and mining just got beaten, the whole sector. It looks like it was an exodus out of the sector. Textiles, apparel, luxury good makers, and so forth and so on. What's the purpose of this? I know that tomorrow, or at least 1 or 2 things, either more people are going to be getting out of metals and mining, or it's getting oversold. There's 2 thought processes here. It's so oversold, we'd look for maybe a key reversal. But at the very least, it's not giving me a warm and fuzzy over the next maybe day or 2. And tomorrow being a Friday, who wants to hold losers over the weekend? That's another thought. Now, this is interesting because I look at the banks, and raise your hand if you notice one of our positions is a long small cap or regional bank, Truist Financial. And today it was the financial sector that kicked it helped really kick butt today and kicked into high gear. It's the small regional banks that did well. Yields are popping up a little bit. In the meantime, I don't want to see in the next tomorrow and then on Monday, if I run this scan and I find out more and more banks are getting liquidated on the rally, that's not giving me a warm and fuzzy that the market is supportive. If banks is what's taken the market up a little bit, the financials, if they're sneakily being sold off, that's kind of a way of getting insights on the health of the current rally. Okay, that's the way my mind is thinking here. So I can look for buying and selling opportunities, but I can also use this setup here to define what the true undertone health of the market is. And the more financial markets, thrifts and banks, capital markets that are selling off, and insurance companies, and the more I see that over the next day or two, if it does continue, it tells me that maybe there's more weakening potential in the underlying, or the underlying market is weakening, and that's not good for the broad market. If you get more and more banks selling off, it's no bueno for the S&P 500. All right, bottom line. So this is another way of looking at the market by one click and finding opportunity and looking at the state of the market. So that's how I utilize the scans, how I look at my when I look at my charts, how I've got my system set up. We have on balance volume. Here's Marathon MPC. This is another stock we were long. What's wrong with this picture? You already see me doing my analysis. While the market is greater than pivots, and that's great, and we're long from a lower level, what's not cool is that on this trade, we had noticed that we had some energy stocks up, and some are generating some daily sell signals, and Marathon rallied, and it rallied from these highs to that high. That's a newer high with no supportive strength in the volume pattern. So that's kind of we'll be watchful of that tomorrow. Okay. So that's how I'm actually using my information. What's on the page here are stocks that we're in. Teva, long. Valero, option spread. Truist Financial, long the stock. Exited half today. Trailed the stop on the balance. And et cetera, et cetera. I've just explained where you can get the indicators, and you can see exactly the combinations of why am I looking at daily pivot above weekly pivot. I want to know if the market is overvalued. I want to see if the market generates sell signals, and I want to see if the market generates sell signals and breaks pivot. When that happens, again, here's a great little example of the market of what I've just discussed for you guys. If the market is truly bullish, it'll trade north of the pivot. Last week was kind of a tricky week. It broke. It pulled right back up to the weekly pivot, and then it just kayaked people, and it was a kind of a tricky trade, right? So navigating these wild swings, and that is a pretty wild swing price-wise, not percent-wise, but price-wise. Those are some pretty big moves, okay? Now, that would cover our what we normally do on, and I just wanted to, because we had a question on HGSI. So I wanted to cover HGSI. Unfortunately, I did not update this yet for today. For tomorrow, I will later, or tomorrow morning. This is a platform that gives us so much information. It just does it in a they break it down with my relative strength. And for that, it would be a class another time for the PMC. But as you can see, they do a phenomenal job of not just breaking down the sector, but the industry, which is also considered the subsector. Here's one name that pops up that it doesn't take a rocket scientist to figure out something's broken with this company. And the funny thing is, as I drive my car, raise your hand. How many people are irritated? Unless you're the culprit, then don't take offense to this. How many people drive in a car and you come to a red light and you're in a hurry, or you got to go somewhere because that's the reason you're in a car, but the person in front of you decides to get on their iPhone and start texting love letters to their entire ancestral clan? and the light turns green and you're sitting there, and the minute you just like gently nudge the horn, like beep, beep, just, hey guy, you know, wake up, they go nuts on you. In other words, everyone's on the phone. By the way, that's a huge pet peeve of mine. Or the best part is on here in South Florida, we have this highway that goes from like north all the way up to New York, I-95. And anyone could go, the speed limit's 65 here in Palm Beach County. And people will go anywhere from 35 with a jalopy that's broken down to maybe 40. And I don't know who the people are driving because I only see two hands on the wheel. And then you get the guy that's doing 120 in his Hyundai thinking he's in a Ferrari. And he's zigging and zagging all over the traffic. In the meantime, you get a guy that's in this kind of traffic condition or person, and they sit there and they do like 40 miles an hour because they need to text or read a text. Slowing down makes driving while texting safer, apparently. Anyway, with everyone, the point of the rant is, with everybody on their phone, they are paying their bill with AT&T. AT&T just can't get out of their own way, whether or not it was their other subsidiary investments that sucked wind, but we are all paying the bill on AT&T. And so the point is, even though despite the fact that they now have a percent of their price to earnings is a 7% dividend yield, when you have Spotify and you have all these markets going crazy, 7% dividend yield at price risk of this company is a waste of your money almost, right? So the bottom line is, with the neat thing about HGSI is I can look at the condition of the market and we can qualify the different types of signals, a PPS, a low close doji, a daily sell with weekly. I can really get down and find out what the condition of buy and sell signals are, and higher time frame ones. So that to me is it's an incredibly powerful platform in the sense that we've been able to add a lot of really specific, important, concise indicators and signals on this platform. So this would be, again, more for an equity trader. This would not be a day trader, certainly someone that's not looking for algo fast swing trades type. This is for maybe an investor looking at stocks, and also somebody who's more looking for identifying what sectors are performing better. This is a company, Kraft Heinz, KHC. We were in that stock. I did lose money, about 5%. We got stopped out right around here. I have not gotten back in the stock. One of the main reasons I have not gotten back into the stock, but I wanted to bring this to your attention because it is one that I'm eyeing. This is kind of like a higher time frame inverted head and shoulders bottom, and if it ever does break out of the neckline of that pattern, the relative strength is starting to improve. You can see, even though it's negative still, it's starting to improve. And the volume pattern, and that's the last thing we were going to discuss today, on balance volume actually mirrors the price action, shoulder, head, shoulder. And by the way, the volume here is greater than the volume there, and the price action here is higher than the price action there. So comparing an apple to an apple, there's more accumulation in Kraft Heinz. On a breakout, this stock would obviously do pretty impressive to the upside. Now, again, it's a 4.8. One of the neat things about this platform at HGSI is how they are able to look at not just the earnings date that's coming out, the dividend dates that's coming out. Is it a dividend yielder? And what is that dividend yield? By the way, Kraft Heinz, as you can see, earnings due is February 11th. So if I'm looking at a stock and I start to see, oh, it's in a sell, but the relative strength is doing one thing. It's worded for you. It's called improving. So we know it: outperform, weakening, improving. If it's improving on a sell signal, what will it do when it generates a buy signal? So I would be very watchful of a stupid little company like the Kraft Heinz eventually, all right, or soon, or the next few weeks, especially for earnings. And I know there's a lot of stocks out there we could go over. I'm just I didn't cherry pick. I just picked two that I know that they're just AT&T's right there. It just popped up because it's let's face it, it's a household name, right? And so this was the list of what came in for today, and this is how it lays out. Again, person's user group, it shows how do we create, what tools did I create, and how are they used, and how are they displayed on various platforms? How do you get better use out of it? That's what we like to do at our monthly meetings. And I spent probably a little too much time on the Thinkorswim and the person's pivot. I apologize for that, but I did a workshop, obviously online. And if you're a thinker, raise your hand. Who's Thinkorswim in here? Just a couple. So if you're interested, take that link, and that will give you the grid. And you can, it's already pre-done on Thinkorswim. But if you don't like Teva and you want to put a stock in like Apple, just type in the symbol. Obviously, we've done our work with Apple and maximize the sell. And some of the stocks, as you'll see, when you expand the chart up, already have person's pivots. I should have probably cleared the drawing set there of old trend lines, but I didn't, so you can do that. And you have the combination already set for you, all the work that I just did. I have given this to our trade room. It was for our class that we did in January called the Laser Target class, which was more of an algo program, and just getting everyone prepared for 2021. But I think if it's good enough for those, it's good enough for me. If it might be good enough for you, that's all. So there's a link, and here it's got everything that you would want on the chart. The only thing that I would tell you, if you change the time horizon for one day to like a daily chart, remember you've got daily charts with daily pivots, and you're going to want to go to studies, edit the study, and then change that week, and maybe don't use the weekly with the daily chart. What would you think you'd want to do if you've had a lower time frame like an hour, and so you got an hour with a weekly, and now you went with a daily? Keep the weekly, and maybe we go daily with monthly. And how do I do that? Hit the cog wheel, change daily, and just go to month and hit OK. Hit apply and hit OK. But John, you just said that a lot of times stocks don't really change value at the end of every month, more so than maybe at options expiration. So would it be better for a high volume optionable traded stock to, instead of have monthly pivots, have the option expiration pivot possibly? I'm just talking out loud, being obnoxious, because the obvious answer is yes. So go to add study, or excuse me, go to edit study, and instead of monthly, cogwheel it, hit the little drop-down menu, and hit option expiration and OK, apply, OK. Now listen, if the relative strength is weakening and you have a volume trend weakens and the market starts trading below those pivots, baby, you probably got a near-term decline coming in the market. All right, market trades south of pivot, el no bueno. Market in a PPS sell signal with weakening volume structure, relative strength is declining, el no bueno. That's my Spanish for it's no good. All right. Some said they don't see a link, and it's the link was grid. Maybe I didn't do it right. I thought I did, but let's double check. Maybe I copied the wrong thing. My bad. Thanks for asking. I'm glad I looked, Keith. Let's go to what was I doing again? And this might be a good thing, Keith, that I didn't do it right. Restore sell. Let me go to SPY. I'm going to get rid of clear the drawing set. Yes. Here's Apple. Let's clear the drawing set and hit yes. And let's go back up here and I know what I did. I think I just, I saved the grid as, oh shoot. What did I just do? Share the grid. I was supposed to do one more thing. All right, so I'm not the, listen, guys, it's a long day. It's a long week. In the world of the knife drawer, they got the butter knife that a 6-month-old baby could play with. You didn't want it to swallow it, but it's the butter knife, right? And then there's that Ginsu knife, the sharpest knife in the drawer. I'm not the Ginsu knife sometimes, but I sure as hell am not the butter knife. I'm somewhere down the middle of the line and the sharp as a knife kind of thing. So that should be the right link there. And it's cool that we did it that way because I just got rid of all those nonsense trend lines. So basically now you have your daily, weekly pivot, a better understanding of person's pivots and the PPS indicator. And then again, how would you want this tool, the relative strength? If the market is the relative strength weakens, traders, and you often hear, if we go to studies, and I'll wrap up here with this, go to, where is it? Add a study and go to, let's see, is it? Okay, let's see if I can make the hyper jump. Damn it. Add study. Make the hyper jump and go relative strength. So there's relative strength index, which is a price-based tool, and there's relative strength, which is what is the strength of this stock's percent change relative to the S&P 500. When the relative strength, and a lot of traders, you'll hear people say this relative to the market and the relative strength. I think this is, yes, SPX. So this is not the RSI Wells Wilder Index. This is the relative strength tool that defines is the market relative to the S&P going up and down. You can clearly see it looks very similar in the trend direction of the moving averages going down. The only difference is it defines the relative strength as outperforming, improving bright blue. So the relative change in percent term is telling you get a buy signal with an increase in relative strength. It's telling you that the market is starting to outperform, and a lot of professional traders want to get into stocks that are stronger relative to the S&P. They're looking for things that are outperforming. That's the whole nature and the thesis behind the PMC indicator. It helps to identify the market better than any other indicator. I didn't invent relative strength. All I did was modernize the tool so it's better to see things and understand, comprehend, so that we all as traders make better trade decisions, better educated trader decisions. And that's what we're about here at Person's Planet, helping traders make better trade decisions. That's it. I thank everyone for joining me at our, I think this was the first PUG meeting for 2021. Been quite a busy year so far. Good luck to everybody in the coming weeks, and we'll see you at the next major PUG event. Thanks, everybody, and enjoy that link for you guys. I thank you very much for your attendance. Take care, everyone. Brian, I hope I answered. If it wasn't you, I hope it was close to someone that you know, Brian, at least. So, again, thanks a lot, George, and everyone. Just remember, if you're not on the email list, go to the website. You'll have to sign up again because if you by accident opted out of our email database, you more than likely wouldn't get anything more than an email, maybe once in a while, defining an event that we're doing or some opportunity. But anyway, thanks again. Bonnie, thank you, sweetie. Everybody, I appreciate you for coming. Till next time, enjoy. If you're in Chicago, the frigid temperature. If you're in Florida, enjoy the frigid temperature. Thanks, George. The book 16 years ago. Yes, thank you. See you guys, ladies and gentlemen.